afternoon from Los Angeles, and welcome to Stock Market Today, sponsored by Interactive Brokers. Now, on today's show, we're going to be taking a look at Apple after all of its product announcements today. Also, Roku, now considered a rival to Apple, I suppose, as well as taking a look at the action for Shopify and Ally Financial. But first, let's take a look at the major indexes. It's Alyssa Corum here with Ed Carson, and right into the closing bell, we saw quite a bit of buying. So the S&P and Nasdaq closed almost unchanged for the day. The Dow was able to pivot a little bit higher. So good to see some support at the 50-day moving average after the first test since the powerful move above that level last week.
Yeah, I mean, the Nasdaq intraday came below the 50-day line. It was actually down there with not that far till the close. So that was nice to get back above that and not have that test. But there's definitely that rotation going on underneath. Seeing a shift out of software and other names, any expensive name that's been doing well in 2019, those stocks continue to take damage today. There were some other stocks that did well. So it's going to be interesting to see, can the stock market continue to thrive in that environment?
Yeah, that's right. And we will be taking a look at one of those software names in a bit. But let's start off by talking about Apple, which didn't really move too much today, closed up a little over 1% after its big fall product launch. Probably the biggest news was the pricing for its Apple TV Plus streaming service at $4.99 a month. So that's a nice bit of information here, as we are seeing a real big pickup in steam with all of the competition in this space.
Yeah, I mean, and it's also free if you buy an Apple product for the first year. So they're really trying to get people in. There have been talk about it being $7.99 to $9.99. A lot of people are just going, what are you talking about? This one might entice people. It's definitely going to put pressure on other folks. In terms of the chart, one of the interesting things here is that, okay, it's moving towards the buy point, and that's nice. And if you look at that blue sort of purplish line, the relative strength line is getting near consolidation highs. But one of the knocks about Apple is that it wasn't really, it was beating the S&P 500 a little bit in 2019, but it wasn't really doing that well versus the big leaders. Well, those big leaders are getting hammered. So now that relative strength line is sort of like a true relative strength. I mean, what is it really competing against? Yeah, it's looking a little better than it did a few days ago in that regard, because these other stocks are getting hit 10, 15, 20%.
Yeah, it hasn't been an explosive mover this year, but clearly holding up very nicely right now. I mean, it did have two failed breakouts from cup with handle patterns earlier in the year. It is now approaching this new flat base, about 2% below the buy point. So we'll have to see what that, as you mentioned, as it really looks like things are shaking up underneath the surface in the market right now.
Yes, it is.
All right, and continuing the conversation about the streaming wars, we do want to take a look at Roku. Those shares got hit pretty hard today, with that stock finishing down a little over 10% in heavy volume. And it's been on a very big run this year, and it's still, even with today's sharp move lower, which came after a reversal off of an all-time high yesterday. It's still far above that 50-day moving average. So, I mean, it's been on a big run. Oh,
a huge run. And part of the reason why it sold off today, of course, was because it's one of those big, hot stocks that is now coming under pressure. But there is definitely, Apple comes out, announces it's $4.99 a month. That one came down. Disney came down. Netflix came down. It's pretty clear why Disney and Netflix came down, because of the pricing competition. It's not exactly clear, because you can make an argument for why Roku would fall on this news. You could actually make an argument for why it would rise, because more people will need Roku devices. But, obviously the market took it as a sell. It's just something here. Everything can look fine, but you have to be ready. And it's an interesting situation, because if you bought it, you still are probably bought it off the gap up. You're probably still up a lot. Well, what do you do now? I mean, because growth could be out of favor for a while. So this is where the selling becomes an art more than a science. Definitely look to see. Obviously, if it came all the way down to the 50-day, well, that would be wiping out all the gains. So you don't want
so maybe using a shorter term moving average as your sell.
Shorter, or taking some profits along the way if you want to see if it can go on. But that's just something to keep in mind.
Definitely, investors should keep that in mind. And Shopify, also a big gainer this year. It is now falling below its 50-day line. The 6% decline today came in heavy volume. So seems like a pretty clear sell signal here for some investors. It's not the 200-day line is still well above that.
Yeah.
So for the longer term shareholders, but the fall below the 10-day moving average in 10-week, pardon me, is a sell signal.
It's pretty bad. It's pretty negative action. This was the last one of those software leaders to hold up. And so you're like, it's going to hang on, it's going to hang on. But just like Alteryx yesterday, which plunged 15%, sometimes you hang on until you don't. Long-term investors, you might want to look at the weekly chart, see how this does, hold on for a few more days.
Sure.
See how this does, if it sells off in heavy volume through the 10-week line, in heavy volume. Right now it is, or at least it's on the way toward it. But you might want to hold on till that point. But this just has all the hallmarks. It was a huge winner, huge valuation, which was in favor. But boy, it's not right now.
Yeah, and this is especially where some of those investor psychology elements really come into play, because this has been such a big winner. So I'm sure many investors out there might have a hard time coming to grips with maybe it being time to sell part of their positions. But you really have to sell right too, in addition to buying right, so you don't undo all of those gains.
Yeah, you just took the risk buying. You took because that doesn't always work, right. And then but you got to lock in some profits too.
Yeah, but I think looking at the weekly chart is a very good point. So we'll have to see if that 10-week line turns into a resistance level.
Yeah.
We'll have to see. All right, and last but not least, let's take a quick look at Ally Financial, which extended its gains today, up about 1.5% after a big move yesterday as well. It is now in buy range over a cup base. So when you talked a little bit about at the top of the show how we're seeing a little bit of rotation into cheaper stocks, this is one of them.
Yeah, I mean, IBD usually doesn't talk about cheap stocks. We usually don't care about
the PE ratio.
The PE ratio, the price to earnings ratio. But if the market likes low PE stocks, you got to, for that time, you got to look at that. This one has a PE ratio of about 10. It's sort of in the sweet spot of the market. It's an auto lender, so it's in finance, and a lot, and a lot of auto dealer stocks are doing fairly well right now. So that's sort of a nice spot. JP Morgan came close to a buy breakout. Some other Auto Nation broke out today. Those are all PE stocks around a 10. So those are things that right now, when you compare it to the 100, 200, 300 PE ratio stocks that we were seeing that were doing so well for so long, that's what we're seeing right now.
Right, and volume has been very strong for this breakout, and that relative strength line hitting a short-term high. That is also very positive to see, so we'll definitely have to keep tabs on this. And as you mentioned, I mean, we look at sector rotation, so it's also good to take other clues from the market about where the money is flowing.
Yeah, and I would say Apple, one last thing, Apple has a PE ratio of 18, 19, and it's almost been a value play. I'm not saying it's cheap, okay, but it's not expensive like the others, so that could be something in its favor as well.
All right, well, we'll have to see where it moves from here, especially with its new streaming service coming out. Lots of stuff happening on that front with Disney's service coming out as all the plus services.
It should be a plus for viewers, I guess.
All right. Thanks so much for watching, everyone. But before we go, we want to let you know, in case you missed it, we do have a new episode of our Investing Strategies show now out. You can head to investors.com/investing strategies for that. This week had a bit of a healthcare sector theme, and one of the stocks that we talked about was Edwards Life Sciences, which actually had a pretty nice rebound off of its 50-day line today. So interesting there. And we also talked to ARK Invest about the genomic revolution. So make sure you check that out. A couple of other quick announcements. We do have a webinar coming up on the 17th, all about your ETF playbook. So make sure you go to investors.com/webinar to sign up now. All right, everyone, thanks so much for joining us, and we'll see you right back here tomorrow.